Hello and welcome to the 23rd lecture of the course Forex in 3 Steps. In this lecture, we are continuing with the classical technical analysis, and we will be talking about identifying support and resistance areas, which is one of the key aspects and concepts in classical technical analysis. Let's jump straight into it. Support and resistance. They are areas on the chart where the price bounces due to a balance between buyers and sellers. So a support area is a low price level where many buyers are expected to enter, pushing the price upwards. Resistance, on the other hand, is a high price level where many sellers are expected to enter, pushing the price downward. This is a simple support area example. So how do we determine a support area? A support area is determined by two factors. Number one is an area where price is unable to break. So for example, here we have price moving in and then bouncing, and then it comes down back to in order to keep moving along the bearish trend, but it bounces again, and for the third time it bounces again, and this means that this area has buyers that are able to hold price and are able to push price up and reverse it. This is the first thing on how to identify a support area. You find a floor, you look for a floor, a place where price keeps touching and cannot break through it. This means that this area is a support area. The second thing to determine a support area is the reaction. So what does that mean? We will in the next lecture talk about candlestick patterns, and this will help you read reactions more, but basically all we're looking for is an aggressive V-shaped reaction when hitting a strong support zone. So a support zone that is likely to hold will cause an aggressive move to the upside when touched. So for example, here you can see we're falling, we're in a bearish trend, and then as soon as we hit this green support zone, we bounce immediately with a V-shaped return. Same goes here again. When we dropped again, then we bounce in a V shape again, and then for the third time price was able to reverse fully. And same goes for resistance area example, but the only difference is it is the opposite. So a resistance area is basically an area where price it's like a ceiling. Price cannot break through it to the upside. So basically we hit it here once, and then we dropped, and again we dropped aggressively with a V-shaped return, and then we came up again and weren't able to break past it. Then we dropped, and then we went up, and for the third time we could not break past it. That means there are sellers here that keep selling, and buyers are not strong enough to break and to beat the sellers, and therefore price was able to reverse completely. Now, one of the key concepts, and something especially if you're going to pursue classical trading, you need to be very aware of support and resistance flips. What is support and resistance flips? Support and resistance flips are basically a concept in trading, classical trading, that states that as soon as a resistance area breaks, it flips to a support zone, and vice versa, of course. If a support zone breaks, it flips to a resistance zone. And why is that? It's because if we have a resistance area and buyers are able to break a resistance area, it means that buyers are in control of the market movement, and they are in control of the price movement. That means that if price ever returns back to the resistance area, this area is now not full of sellers, it is full of buyers, which means the area is now support, and expectations are as soon as we break a resistance area and we retrace back to it, it flips into a support zone, and you can look for buys into it. So this example here, we came up, we hit a resistance zone once and twice, and then we were able to break it. So that means as soon as you hit an area once or twice and you reject strongly from it, just like here, as you can see the red candles rejecting from the resistance zone, this means it's a valid resistance zone. Make sure that the zone we're rejecting from is a resistance zone by seeing the following. Like I said, seeing a nice reaction, rejecting from the zone, and also seeing the inability for price to break through. Even though the price here broke through eventually, but it failed twice to break through, and that is sufficient enough to call this a resistance area. As soon as we broke through, this means that buyers are in control and sellers are not strong enough, and therefore when price came back here, buyers stepped in again as they were fully in control now, and price came here and rejected very aggressively once and then twice, and then the price started racing upwards. This is a resistance to support flip. The opposite can also happen. If we have a support area and the support area breaks, then the support area turns into a resistance area, and you can look for shorts and you can look for sells from that newly formed area, because that states that sellers are the ones in control of the market. That is basically it for this lecture. Support and resistance is a key concept in trading, and it requires lots of practicing to get it right. So please make sure you practice and you go look for these models, look for how resistance flips to support, and look for how support flips to resistance, and look how resistance and support control and move the price of the markets. Thank you, and I'll see you in the next lecture.